Hey guys, it's James and we're back with another valuation video. Today we are doing Colgate Palmolive, or ticker symbol CL. This is my valuation spreadsheet where we take the discounted cash flow model, grams model, and dividend discount model, find out a valuation for them, average the valuation, apply a margin of safety, and then compare it to the current price. The current price of Colgate Palmolive is $77.76 with a PE ratio of 33.91, current dividend yield of 2.42% with a dividend payout of $1.88 annually. Here's just a chart of their 10 years of annual free cash flow. You can see there's a slight trend upward where there hasn't been many outstanding years except for 2020. What does this trend line mean? Well, this basically means coming over here, and we'll go over this, there's been an average growth of about 1.05% annually for the free cash flow. Over here is our 2-year price history chart. You can see Colgate Palmolive is trending in the downward direction on their price over the past 2 years, and we do have the 20-day, 50-day, and 100-day moving averages just to compare the moving average with the current price. So our first valuation method is going to be the discounted cash flow method. And if you guys want to follow along with this spreadsheet, I do offer this spreadsheet as well as other spreadsheets over on my Patreon. Here on my Patreon, I do offer 3 separate spreadsheets, and in each spreadsheet there are multiple workbooks. In our future value workbook, we have our compound interest formula calculator where you can predict the future value of your portfolio, as well as a simple to use 401k calculator. Then we have our dividend portfolio tracker spreadsheet where we are currently evaluating Colgate Palmolive, and then we have a mini budget tracker spreadsheet. So if you guys want access to the spreadsheet and you want to follow along with the video, head over to Patreon and download the spreadsheet. Coming back over to our DCF model, first off we need to find the past 10 years of free cash flow. And where do we do that? Well, we can use Y charts. Over on Y charts for Colgate Palmolive, it has the quarterly cash flows going all the way back from 2010, but we're going to start at March of 2012. I added up the 4 quarters of the past 10 years and was able to add them up and then put them in the white boxes here. I put in a perpetual growth rate of about 1% if Colgate Palmolive was to go off into infinity. I'm saying that it would grow 1% per year on average, with a discount rate of about 8%, which is very standard for the DCF model, and the cash and debt numbers. Where do I find the total cash and total debt numbers? Over on Seeking Alpha for Colgate Palmolive's page. Going over to the valuation tab, coming down to the capital structure, total debt $8.25 billion and total cash $1.15 billion. Now there's a lot of things that Seeking Alpha does offer. They do offer a premium subscription, and I know Seeking Alpha is fairly popular among the YouTube community. In Seeking Alpha, I have partnered with them, and going on until January 3rd, 2022, Seeking Alpha is going to offer their premium membership for only $39 for the first year. So if you guys click the link in the description, you'll get Seeking Alpha Premium for $39 for the first year, where typically I can get it to you for about $99 and the full price is $239, but you can get it for the first full year for $39. Coming back over to Seeking Alpha, taking our total debt and our total cash, putting it into the calculator, we now are able to figure out the valuation for the DCF model. Coming over to Graham's model, I know there's a lot of things in the Graham's model that we use, but all of it is hidden in the formula for Graham's model. The only things that we need to input into the calculator for Graham's model are the expected growth rate over the next 5 to 10 years and the AAA corporate bond rate as of today. Well, the growth rate, we can find that over on Yahoo. Coming over to Colgate Palmolive's page on Yahoo, over on the analysis tab, coming down to growth estimates, it is estimated over the next 5 years. Every year, Colgate Palmolive is expected to grow about 2.2%. So we put in 2.3. The AAA corporate bond rate is just, you can find that the current daily rate on Google. Coming down to the dividend discount model, the dividend payout and the 5-year dividend growth. You can find that easily over on Seeking Alpha again under their dividends tab and their dividend scorecard. The annual payout is expected to be about $1.88 with a 5-year dividend growth rate of 3.19%. So we take those two numbers, put them into the calculator. The risk-free rate is the 10-year bond yield. You can find that on Google, 3.48%, and the expected return of the market around 8%. So now that we have filled out the 3 separate valuations, we come over here and we go ahead and click go for our valuation. And if you want to change your margin of safety, you can change your margin of safety here, or you cannot apply a margin of safety and see if it changes anything. We're going to apply a 25% margin of safety. But first off, the DCF model gave us a valuation of $41. Graham's model gave us a valuation of $22, and the dividend discount model gave us a valuation of $70. So we averaged these 3 together, applied a margin of safety of 25%, which gave us a valuation of $33.32. Colgate Palmolive current price is $77.76, and do recall that the PE ratio is fairly high at 33, almost 34. So that gives us a valuation, or gives us a sell signal. So let me know what you thought of this video. Head down to the comments. Let me know what you want to see next. If you want to follow along with this video series as I'm doing the valuation of these separate dividend stocks, you can follow along with the spreadsheet over on Patreon. And with that, thanks for watching.